Rakesh Jhunjhunwala systematic. Inflation. 8 points for Rakesh Jhunjhunwala's view on inflation. Point 1. Rakesh Jhunjhunwala always insists that investors should react at the very moment where the gains are to be locked in. When the inflation is about to rise, the smart investor should interpret that interest rates will also rise, so they should sell the interest rate sensitive stocks like automobile stocks, banking and infrastructure stocks, and start buying defensive stocks like FMCG and pharma stocks. Similarly, now, when the inflation is slowing down because the commodity prices are falling, investors should now anticipate tomorrow that interest rates will soften and slowly start buying interest rate sensitive stocks like banks, autos and infra. Bottom fishing can be done here and the downside potential is limited, but on upside huge growth can be seen once the interest rate cycle starts to reverse. Point 2. Rakesh Jhunjhunwala says don't worry about the macro stuff like fiscal deficit, inflation which are unknowable. Focus on what is knowable for investors who keep worrying about currency fluctuation rates, inflation, fiscal deficit, political turmoil is. Don't worry about things that you neither know about nor can do anything about. It's not important. Instead, focus your energies on what you can and should know well enough, the business of the company you are investing in. Point 3. Keep buying if the problem are short-term ones. Rakesh Jhunjhunwala, with his sharp perspective, laid down the entire problem on 2 issues: inflation and government inaction. Rakesh Jhunjhunwala said that inflation controls everything, interest rates, growth, and also pointed out that though there were good people in government and they knew what step to take, but they were unable to take big moves decisions. Rakesh Jhunjhunwala emphasized that problems like these are temporary in nature by categorically stating that the next 3 months are going to be a very difficult period for the markets. Point 3 continued. What is embedded in this statement is that once inflation begins to cool down and the government does some action to bring some reforms in infrastructure, GST etc., the stock markets would begin to soar again. Rakesh Jhunjhunwala made it explicit. If the monsoon is good and commodity prices ease, which I personally expect, oil prices should be at 80-85, and some government action comes through and inflation may not have come down, but it becomes apparent that in future months, inflation is going to come down, then the Indian markets will have a very strong ride after that. So I am saying that the next 2 to 3 months are uncertain depending on how events turn out. The period for the next 9 months could be very good or could be okay. Point 4. Question which basic things he has repeatedly laid emphasis upon regarding economy. He laid more emphasis on commodities prices on global scale, crude prices and Western happenings along with inflation and government action. Point 5. Rakesh Jhunjhunwala keeps a constant view on U.S. payroll figures. The fall in commodity prices or a fall in inflation for any other reason, therefore the peak of interest rate cycle, and then therefore aggressive correcting of interest rates. Secondly, problem of hedge in America, better growth in America. Point 6. When market seems bright, technically market seems well pulled, had a good monsoon, commodity prices had come down, I think will further come down, and I think if inflation can be attacked or inflation can correct, which it could if commodity prices will come down probably at good monsoon, peaked at the interest rate cycle, and if interest rates come down, I think India will do very well. Point 7. 3 things trouble us: inflation, government action/inaction, and international happenings. Point 8. The very big factor for oil is liquidity, and one thing which people don't mention, that if the oil prices are high, the oil companies, because of subsidy the government doesn't pay them, they stock of the liquidity, and it causes interest rates to harden. Also it has effect on the current account deficit, on fiscal situation, on inflation, on stock valuation, and the oil prices won't settle down in a hurry.